Howdy, folks. Welcome to Liberty Call. Today is Thursday, February 29th, 2024. Hope you're having a fantastical day out there. It is a beautiful day here in Colorado. Sun's out. You don't even really have to put on a jacket unless the wind can be a little chilly, but it is gorgeous. And ran into town for a bit, had to donate a couple vials of blood to make sure my arthritis medicine doesn't kill me. And other than that, having a fantastical day. So, like I said, made a quick trip into town and back out. And like I said, weather's nice. Hope you're having a fantastical day out there. Markets, they did finally manage to pull themselves back into the green for today. Started out the day in the red, and the NASDAQ and the S&P 500, seemed to be green most of the day. But the Dow, right at the finish line, just right in back above the flat line. So, all right. Well, if it is your first time watching Liberty Call, if you could do me a favor, if you could give me some thumbs up, a like, a share, subscribe, a follow, and press that damn notification bell, because I go live between usually 2 to 2:20ish, depending upon how much news has happened during the day and how much other crap I've been working on in between. All right, let's get to today's numbers. Dow Jones up 0.12%, 45 points. Closed at 38,994. S&P 500 up 0.44%. Closed at 5092. NASDAQ up 0.9%. Closed at 16,091. The VIX fell 3.83% today. It's back at 1331. Canada up 0.56. Brazil down 0.88. And Mexico fairly flat at up 0.08. In Europe, Germany was up 0.44. The UK was up 0.07. France down 0.34%. The Netherlands up 0.12%. Spain down 0.67%. Italy down 0.11%. Switzerland up 0.21%. And Portugal down 0.56%. So kind of mixed across Europe. Russian exchange is both green again today. MOEX up 0.92%. The RTSI up 1.16%. And the Asian markets, the Nikkei in Japan was flat, up 0.03%. Australia up 0.5%. New Zealand down 0.21%. In China, the Shanghai was up 1.94%. The Shenzhen Component up 3.13%. China A50 up 1.13%. DJ Shanghai up 2.13%. Hang Seng down 0.15%. And the Taiwan weighted was up 0.6%. So it looks like the Asian markets were pretty solid, except for New Zealand, and the Chinese markets are all up more than 1% for the most part. And like I said, Europe, it's kind of mixed. And then, like I said, we finished off here in the green at the end of the day for the Dow. All right, let's get to today's market recap. U.S. stocks give up some gains, but inline inflation data keeps a lid on losses. On Thursday, U.S. stocks saw gains fueled by an inline inflation report that raised hopes of a potential interest rate cut in the summer, no longer March or May, causing Treasury yields to decline. The personal consumption expenditures price index rose 0.3% last month, matching economists' expectations, while the year-on-year increase was 2.4%, the smallest since February of 21. This alleviated concerns about persistent inflationary pressures. We'll talk more about that later, indicating a possibility of the Federal Reserve maintaining accommodative monetary policy. Despite the positive inflation data, personal income surged by 1% in January, suggesting sustained consumer spending momentum. However, jobless claims rose more than expected, contributing to optimism for a potential rate cut. In the retail sector, Best Buy stock rose over 1% after reporting better than expected fourth quarter sales and profit figures, driven by holiday promotions and membership growth. Conversely, Bath & Body Works stock declined by 5% due to a disappointing sales and profit forecast, reflecting reduced consumer spending on non-essential items. Among enterprise software companies, Salesforce announced its first ever quarterly dividend, and increased buyback program boosted its stock by 3%, despite lower than expected full year guidance. Okta Inc. saw a significant surge of 22% after issuing strong guidance for the fourth quarter following impressive fourth quarter results. However, Snowflake faced challenges in it as its CEO retired, and the company forecasted first quarter revenue below below expectations, leading to an 18% drop in its stock. Nonetheless, some analysts view this as a buying opportunity, citing Snowflake's strong product offering and sales capability amid growing competition. In contrast, HP's stock declined over 2% after reporting quarterly revenue that missed estimates attributed to weaker demand for personal computing as enterprise consumers delay upgrades. Overall, market sentiment remained mixed, with optimism driven by potential rate cuts tempered by concerns about corporate earnings and economic growth. All right. So again, it's kind of a mixed day. Markets kind of reflect that in what direction they're headed. So, all right. Next up, services drive U.S. prices higher in January, inflation gradually cooling. In January, U.S. prices saw an uptick, primarily driven by escalating costs in services like housing and finance, while the overall annual inflation rate was the smallest in 3 years, maintaining speculation about a mid-year interest rate cut by the Federal Reserve. Consumer spending moderated last month due to declines in purchases of purchases of goods such as motor vehicles and furniture. Despite the surge in service costs, economists remain uncertain about the timing of the Fed's rate cut, noting that January's inflationary pressure may not persist into February. The personal consumption expenditures price index rose by 0.3% last month, with notable increases in housing and utilities costs. Core inflation, excluding volatile energy and food prices, increased by 2.8% year on year in January, slightly lower than in December. The labor market, a key determinant in consumer. Let me start over. The labor market, a key determinant of consumer spending, showed signs of prolonged unemployment, with initial claims for state unemployment benefits rising by 13,000. Continuing claims also increased, hinting at a potential rise in the unemployment rate from January's 3.7%. Despite this, wages saw a 0.4% increase in January, contributing to a 1% jump in personal income, supported by a cost of living adjustment for Social Security recipients and a special dividend from Costco Wholesale Corp. However, rising taxes coupled with inflation left disposable income unchanged from December, prompting households to increase their savings rate slightly from 3.8%. The labor market's resilience in supporting wages contrasts with consumers' cautious spending behavior amid inflationary concerns. Financial markets have adjusted their expectations for a rate cut to June, reflecting the Federal Reserve's cautious stance in response to evolving economic indicators. All right, so we're going to dive a little deeper into the inflation numbers. This comes from Zero Hedge. This article is titled "SuperCore Inflation Soars in January. Services Costs Re-Accelerate as Government Handouts Spike." All right, the latest inflation data presents a nuanced picture. The core PCE deflator, a key metric for the Federal Reserve, eased to 2.8%. Year on year in January, its lowest level since March of 21. We already talked about that, indicating some moderation in inflationary pressures. However, services costs surged on a month-on-month basis, raising concerns about sustained inflationary pressures. Short-term indicators show a notable increase in annualized rates, with services costs experiencing a significant uptick. Additionally, durable goods costs shifted from deflation, indicating some volatility in pricing dynamics. A deeper dive into the data reveals that services inflation, excluding shelters, rose on a year-on-year basis, propelled by a substantial monthly increase. While income saw a significant boost, spending growth slowed compared to previous periods, with increased government handouts contributing to higher savings. Despite apparent disinflation at the headline level, concerns persist regarding sustainability of this trend, particularly concerning acyclical factors. Underlying acyclical core PCE inflation remains elevated, prompting questions about the Federal Reserve's potential policy response amidst robust economic growth. The data suggests that while there are some signs of moderation in inflation, particularly in cyclical components, underlying pressures persist. While strong growth indicators and lingering inflationary concerns, the Federal Reserve faces a challenging decision-making landscape regarding the trajectory of interest rates and monetary policy. And there's also a bunch of charts here. It shows how the jump for the month-on-month here in PCE, and then also in core PCE. And then in the SuperCore month over month, you see the jump also. And then in SuperCore year over year, you do see that tick up right there. So if you want, the article is linked in the show notes, so you can go ahead and read it at your own leisure. All right, last article here comes from our friends over at the Mises Wire. Real wages turn negative again as price inflation refuses to go away. This was written by Ryan McMacken. All right. The Bureau of Labor Statistics reports that despite predictions of transitory inflation, consumer price index inflation accelerated 3.1% year over year in January. This article was written on the 27th, so it's prior to today's numbers. Let's see here. Marking the 35th consecutive month of inflation above the Fed's 2% target. Month-over-month inflation also rose with a 0.3% increase from December to January. This ongoing inflation trend is driven primarily by rising prices in food, services, electricity, and shelter. Who would have thought that the most common things used by consumers would be those things, and that they're going up in price, which is making everything else more expensive. Core CPI growth, excluding volatile energy and food prices, remains stubbornly high at nearly 4%, nearly 30-year highs, with January's month-over-month increase being the largest in 9 months. Real wages turned negative for the first time in 9 months, with year-over-year a change in average weekly earnings at 3%, while CPI inflation stood at 3.1%, indicating a decline in purchasing power for average wage earners. The Wall Street Journal highlights that food costs have reached a 30-year high, with prices at restaurants up 5.1% and groceries up 1.2% compared to January of 23. Despite claims of falling inflation, CPI has risen 18% since January of 21, outpacing the 13% increase in weekly earnings over that same period. The Biden administration's attempts to attribute inflation to corporate greed or external factors are viewed as deflective, with the root cause attributed to the Federal Reserve's monetary policies. With soaring food prices, declining real wages, and escalating housing costs, critics point to the Fed as the primary driver of inflation. I wholeheartedly agree. This is the Fed's fault. They created this problem, and then now they're going to expect an attaboy for fixing it. So maybe if they hadn't done anything, everything would have been fine. Yes, we would have gone through a bear market, downturn, all that good stuff that we were heading into in the springtime of 2020. Granted, who expected COVID? I didn't. Who expected everyone to, follow the leader and shut down everything just because, the morons in government and on TV said so? Well, if you listen to someone here, all those conspiracy theories that everyone talks about, I'm batting nearly 1,000 right now. So granted, I don't want to get too ahead of myself or have showed too much hubris, but it's hard to be humble when you're right on everything. So I wish I was right about the markets. I was expecting all the smart people I read, not the retards on TV, but they are all talking same thing. What is it? The inverted yield curve. I mean, that's a clear sign that, things bad are going to occur. And for it to have stayed inverted for all of this time, I mean, we're going on close to 2 years at this point. And I mean, granted, usually then the yield curve normalizes and then the downturn starts, but sometimes the downturn starts while the yield curve is inverted. So it's like, anyway, so like I said, whether or not last year's predictions were wrong, I just think they're delayed. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to, where is it? Here it is. DSAFinancialGroup.com. All my contact information's there. I hope you have a wonderful evening, and I shall talk to you, yes, you, next time. Bye-bye.